Good morning again, everybody. Michael here with your latest supply and demand market report. I hope you're all well. I'd like to start off by saying a big thank you to all of you who watch these videos, who comment below. Thank you for your participation. Don't forget to like and subscribe to the channel if it's of value to you. I appreciate it. It allows the YouTube algorithms to pick the videos up. Also, leave a comment below if you had any questions, or email me at storehouseanalytics@gmail.com. And with that, let's get going. So this video is going to be focused on the energy, metals, and agricultural markets, as we do. So we'll start off with natural gas. This is where we left off last time we were together. So looking at natural gas, nothing much has changed. We've had an inside week with not that much movement. We were talking about this level last week and how probably wasn't a good idea, but this market hasn't gone anywhere in the last week. So again, it's still on the watch list. We've got the levels that we're watching around just above 290, around $3 to see if it's going to base below that and then try and make a move higher. But for now, it's still just going sideways. You can see the detail of that move on the daily chart as it's trying to arrest the bloodbath that it's been in since the end of 2022. But so far, it's still basing. We'll see how that evolves over time. But we'll keep watching it on the channel here so that we're together as it evolves and see how it progresses, and we'll keep you up to date on that. All right, looking at crude oil. So crude oil, we were talking last week about probably not a good idea to take this this level of supply in here, and it with the news from OPEC last week on Sunday, I believe it was, the markets just went through all those levels. You can see I haven't touched the lines since the last video, so they're all pretty much the same thing, and we can see that it is also, like natural gas, stuck in that range. It is trying to hold the demand zone right here on the weekly, which is still the demand zone in control. It's spent 3-5 weeks in that base, so we'll see. It's made the first attempt. It's not always successful on the first attempt, but it did make that attempt to try to break out of the range, which obviously, as we just said, got knocked back. But it hasn't fallen out of bed yet. It hasn't, fallen out of bed. That supply above there is still what we would like it to take out as a starting point for us to even start to think about going long. There are traders that are trapped in this market, people who tried to short below these price levels when it went lower. They were the ones who had the experience of having their stops run as it went straight back up, and now it's trying to settle in. Where it goes from here in this area that I'm putting in blue and highlighting, where it goes from here is going to be what determines the next move in this market. So it's on the watch list. So those are the energy markets, Brent crude and natural gas that we follow. We'll go to the metals next, and we'll go to silver. So silver is holding demand. Again, prices hit into a weekly demand zone. We wanted these price levels to be taken out. We had the push out that removed that high, and that demand zone has been working. So all of last week, this was Friday, Thursday, Wednesday, Tuesday, Monday, it hit into that level, and it's been upward so far. So it's time to start looking in silver for the possibility of going long in silver. This isn't the greatest of levels because of the size of that wick, but that's the level that is right below current price, this whole area here. Remember, these aren't recommendations to do anything with your money. I'm not a financial advisor, and I don't know your personal circumstances. These are purely for educational purposes only. So that's silver. It's looking like it's setting up for a potential trade idea in there for silver. Let me just take out these. No need. So that's a silver trade. Looking at gold, gold is still undecided. We have that cresting over that we talked about. It's still got that level and it's basing right above it. We would much prefer that it come lower, as we discussed last week, but we don't know where it's going to go, especially if silver moves off from where it is. They don't tend to move too far away from each other, so it might be that we're seeing, although gold has been lagging a little bit in recent weeks after being stronger, it might be that gold wants to base around here now and then go from here without pulling further down. But we'll see that when it happens, and it'll bring opportunities. Ideally, we want to get through this supply zone, and obviously before we even get there, we're going to need to get through that one, which is the one that's been holding prices down so far. In fact, getting through that one puts this one as a no trade, as a risky trade. Okay, so that's gold. Copper's trying to come up. I made a boo-boo on copper, actually, when I was analyzing this last week, where I said I was not going to take this trade. My algorithm was off, and I've since corrected it, so it's one that we are going to be watching up into this area, given that it's in a downtrend and the weekly supply does measure up. Once we corrected that error, it does measure up into something we would be interested in, looking at what happens to price when it comes up into that weekly supply. So that's copper, another potential trade idea. And looking at platinum is trying to hold at weekly demand. It's beginning to trade through daily supply levels and beginning to create or start to create levels of interest at that weekly level. So we'll see how it performs going forward from here. We'll see how that does. If it pulls back further in, then at the very least, we're going to be observing it in and around this area. It still has supply to get through above it, but the fact that it's trying to hold here, at the very least, it's ended the down move. It's ended the move to the downside. So it's early, it's aggressive, but it could also be the trade that turns, and that will present further opportunities. So even if you're not in yet, there will be other opportunities as it starts to realign. The daily starts to realign with the weekly. So one to keep on your radar for those of you who trade platinum. And looking at palladium, palladium is the weaker sister. It's trading deeper and deeper into this previously tested weekly demand. Supply is holding. You can see the double top in the weekly level there that it created, and it's just tanked since. And on the daily, supply zones continue to be held. As prices rally to them, they continue to be held. So it's showing a lot of weakness. Below us where we are, it's still into that demand zone. We probably need a good rally. This level here is not ideally located, unless of course we trade through that weekly. If we trade through the weekly supply to the downside, then we might be interested in this daily supply, but for now it's very poorly located. So we'll see what happens next. So lots of interest on the metal markets. They're beginning to perk up, is the summary of all of that, from silver all the way down to palladium. Okay, going to the agricultural markets, let's look at sugar. So sugar is continuing to pull back. It has again also woken up, and where we're at inside this weekly demand zone, even though it's quite extended, there are people still clearly trying to buy and not wanting to feel left out in this weekly level. So it is pulling back a little bit, and we'll see how it gets on. It has removed daily supply, meaning that there are some buyers trying to hold this market. So another potential opportunity there. We'll see how that goes. And let's go to wheat real quick. So wheat is obviously very weak, but again, on the daily, you're beginning to show some strength. We have ended that down move. If you look at the current down move, we'll see how it gets on, and we'll see if this attempt to hold on the daily does take hold and move up. Okay, so nothing to do right now in wheat, but keep it on your radar. And looking at corn, corn has negotiated that supply zone that we were looking at. It was an immediate return. It's now traded above it, and it's quite the wicky one. So it's not one that I would recommend given the volatility. There are attempts down here to hold it, but very, very ugly zones. You can see the daily demand zone that is still holding is around there. It might be that we push up from here and go through that, and then new demand zones will be created. So that's corn. And soybeans is now coming up into areas of interest, so bear that in mind. It is coming up. The potential profit margins, initial profit margins, might not be so great for this particular zone, for example, given where this demand zone is located. So, but it is definitely also looking up. So opportunities in the metals and in the agricultural markets would be the summary of this analysis. So I hope that's useful for you. Again, please like and subscribe to the channel if you haven't already. Thank you for sharing the videos. And 12 minutes. Thank you, everybody. Take care. Bye for now.